Father and a good Father. We thank you for that, Father. As we have been in a virtual environment for quite some time, we thank you for letting us thrive even in the midst of a pandemic. We know that so many have not done well, but we thank you that you are gradually returning us to a sense of normalcy. And we ask you to help us to continually use wisdom in all that we have been set to do. God, we pray that our meeting today be productive, that things that are shared are things that we can use to help our community and to help us be better servants for our community. We ask God you bless everyone under the sound of my voice and that you make your face to shine upon them and give them peace, give them rest, and give them safety and security like only you can. Prosper our hands so that we can edify you and glorify you. It's in the name of our Lord that we do pray, believe, and receive. And we say amen.
Amen. Amen. All right. I'd like to have our Vice President, Miss Perrette Parker, to welcome visitors, please. If you're new, she will. Go ahead, Miss Perrette.
Well, hello, everyone. Happy Friday. So be prosperous. I want to say welcome to all of those that are on the call, but I'd love to say hello, especially to those who are new to us. If you are new to us, wave your hand or put it in the chat, say hello, let us know who you are. Let's connect.
All right. Is there any new members who their first time attending the meeting? Would you introduce yourself, or you haven't been here in a while to our meeting? Okay, that's some of the same members, which is great. All right, guys, we are. Huh?
Go ahead, Monty.
Oh yeah, no, Joe, you're one of the presenters, so no need at all. You get the opportunity.
Thank you.
All right, guys, we are still collecting memberships. We'd like you to still join, have an opportunity. Our numbers have dwindled down toward this virtual world, so if you're not financial, please get an opportunity to join. We got a lot of information we're still pushing out. We have a conference coming up with NAREB in the month of June 3rd through the 5th. So you'll hear me say that a couple of times. And then we also have a national conference coming up July 24th through the 27th. So the memberships are important, and if you can definitely attend, this is a very reasonable conference that we are having virtual for, like, you got to be a member for $25 just to attend the meeting. So please get opportunity to first join NAREB Dallas, also join Women's Council, and hopefully see you at this conference that we're trying to do with NAREB. So first up, as one of the sponsors, we have Kevin Soros with ADT. Have your way, Kevin, please.
Thank you, sir. Good morning, everyone.
Good morning.
And like you say, just like to say thank you and welcome myself to this wonderful platform that you guys have put in place for people like myself to be able to come on and just share some of the things that I'm actually doing. And I'm sure you're not, so that most of you guys are familiar with. Me being a part of my name is Kevin Sword, and I actually work with ADT as a relocation specialist with them. So I definitely deal with small businesses as well, anything under 10,000 square feet. So I definitely have that access to be able to help guide them in their needs as well. So today I'm really just here to just offer my time and my expertise in the future when some of you guys actually are looking for a reliable security resource. And I'm sure everyone has their go-to security person that they actually have. Just look at me as one of the another resource that you have access to during this time, because I know some people are busy, and then of course the market being so competitive. I just want to be able to just give my services as well as needed. Okay. Now, of course, we all know ADT has been the grandfather of them all in the security industry. been around over 145 years. And the thing about it is companies don't make themselves. It's actually people like myself and of course other people that actually have that direct connection with the people in the community, but more importantly, the people that they actually trying to help secure and help make sure that they're in safe, secure needs. And that's what I wanted to basically just be able to do, is be able to say, hey, look, let's talk, let's partner. A lot of times I noticed in the real estate industry, when dealing with it, you guys you're so tied with your clients, whether you're broker, your builder, you're tied with each other, as opposed to that little thing. But I think the next important thing, of course, once they secure their home and getting themselves situated, is being able to secure a new place where they're moving into a new neighborhood they don't know, they're not as familiar with, but it actually allows people like myself to come in and then just show them the numbers on things that's being done. But more importantly, to give them access and security. Peace of mind is everything. And that's all we're looking for in doing this time, is make sure that they do have that peace of mind. As you all know, we handle more than 99% of our critical alarms here at ADT. We do respond within 60 seconds. And that's always a plus side when people are looking to and making sure that they're trying to make sure their services are taken care of, because we have the largest and the most monitoring centers. We have over 9 monitoring centers that we being able to secure that with over 20,000 employees. So it's always someone at your service in those needs for your clients. And then of course, just the home security, it basically helps. It just helps in general. I mean, it decreases burglary risk. It's just like any other insurance that we get into, whether it's our home insurance, whether it's our car insurance. We don't get into cars expecting to go and have a fender bender. But if it does happen, in that case, that's what we're here for. And that's all we're just trying to get that in front of people. And then of course, being able to say, hey, look, it's a higher risk on your security, but more importantly for us, it gives the clients home insurance discounts to know that they have that insurance. And then of course, for me, just in closing, we do offer a referral program. Our referral program, it's a $200 referral program for every person. If you're an existing customer, you actually are awarded that $200 in a gift card. And then, of course, if you're just a part of the buying process and you're not an ADT customer, existing customer with us, we still give you, we make exceptions with you. If you actually send in referrals to myself, what we do is if you can guarantee that you can actually submit me at least 5 a month. And then, of course, once I do close those accounts, you do receive that $200 gift card. So we can actually do that. What I'll do is I'll definitely put my information in the chat. That way you can actually have it. But more importantly, I'll open it up if you do have any questions for me. Because like I said, I know a lot of you guys are familiar with the security competitors, but not so much. A lot of times it's the transfer services. How that works is where we come in as your partner. Where I can actually come in and help your client firsthand. So,
okay,
thank you.
Kevin. Any question for Kevin, guys? If not, please share your information in the chat. And I have used Kevin already. He's very professional, and they have made it simple. So all you got to do is put your client's information in his link that he sends over, and he takes it from there. So it's a great service, guys. So please use them. All right. Next up, I have no other than the man himself, Joe Vasquez.
Hey, Monty. Good morning.
Good morning.
Hey, thank you so much, Monty. I greatly appreciate it. Thank you for the time, and I'm glad to be with you guys. Can't wait till we're all in person one more time. So my name is Joe Velasquez. For those that I have not had the honor and privilege to meet you yet, I am with Bank of America. and I'm part of the neighborhood lending team. What we do within neighborhood lending for Bank of America is we drive our initiatives to increase home ownership, very specifically in low to moderate and multicultural areas. That's my job. That's what I do. And so I wanted to make sure that I would bring that highlight to you. I know that some of you may be familiar with our community home ownership commitment. I know that some of you may have heard, bits and pieces here and there, but I wanted to bring you the full package so that you have this readily available and to increase the awareness out in the market. And I say that because not only will you benefit from having full understanding of this commitment as a real estate professional, but also there are many, many clients, as you and I know, there are many, many clients out there that will benefit. And I know there are many more families that are pending out there to get help through some of these programs and products that I'm going to talk about. So what is the community homeownership commitment? I'm glad you asked. It's a commitment to, as it said, a commitment to homeownership. So I'll give you a little bit of history. In 2019, April 2019, Bank of America announced a $5 billion commitment to homeownership. And at the time, 2 years ago, it was $5 billion. It was a 5-year plan. And we were set to help a minimum of 20,000 families that would achieve homeownership through this initiative. Well, I'm excited to tell you that 2 years after we launched that in April 2019, so April this year, we not only did we meet our $5 billion goal, meaning we went through the $5 billion, we also helped more than 20,000, it was about 21,000 families that we already had assisted. So you think about that, it was a 5-year plan, yet we were able to do that in 2 years. Because of that, Bank of America has tripled down, and we've extended the commitment to 15 billion, 15 billion, all the way through the year 2025. And now obviously our goal, we're tripling. So we're looking to help more than 60,000 families achieve homeownership through this plan. And obviously, this plan it's a national initiative, but I can tell you that it has a local impact because these products and programs are available right here in the Dallas area, and I'm going to talk about them. So that's the commitment. It's a $15 billion commitment to homeownership through 2025, and ready to assist more than 60,000 families. There on the screen, you see some of the numbers that we've achieved, already so far. If I can call your attention to the one in the middle, where total average of grant amount is $14,000. So if you think about the average amount of the grant funds that are going out to one homeowner, it's about $14,000. So let me just share with you very specifically, what is this commitment? What does it mean? What does it mean to you? What does it mean to a consumer, to a buyer? Let me just kind of walk you through. The commitment is really made up in a bundle of, let's say, 3 pillars. It's made up of mortgage products. It's made up of grants, money that's available, and it's made up of resources. And so let me talk about each one of those very quickly. So the grants, first and foremost, the Bank of America's down payment grant. That is literally a grant that's given out from the bank to the eligible or the pre-approved buyer. And again, bank money. This is not money that comes from any other agency. It's literally funded by Bank of America. The way that works, it's $10,000, but it's 3% of the purchase price up to $10,000. So if someone is eligible, if someone qualifies, they can get either 3% of the purchase price, or they can get all the way up to $10,000. So that's the down payment grant, and that's available in the Dallas counties, or let me say it like this: the Dallas MSA counties. So it is by county, so it's eligible counties. So it's Dallas County, it's Kaufman, it's Rockwall, it's Denton County. If you can think of all the counties that surround the city of Dallas, all of those counties are eligible. The other grant is the America's Home Grant. As you can see here on the screen, America's Home Grant is a closing cost grant, and that one is up to $7,500. And so the way that works is that money will cover any non-reoccurring closing costs. So you got title, you got lender fees, title fees, tax fees, all of the fees can go towards that $7,500. And it actually, let's say that total closing cost is $5,000. Well, there's $2,500 remaining. We can actually use the remaining funds to buy down the interest rate. And so you can imagine we're seeing families that literally are locking in 30-year mortgage fixed rates at like 3% or below because they're leveraging the grant, all the way to the maximum. So those two grants can actually be used combined. That's why you see in the document, the average grant is about $17,000, because you can actually have families that are eligible and they qualify and they get both. And so we maximize that. And also these are programs that can be used in conjunction with other city or other down payment programs that are out there, like, City of Dallas, City of Irving. We see families that actually get that down payment, plus they qualify for our grant. So you can imagine it's phenomenal. I'll give you just a quick scenario of how someone qualifies, okay? So I wanna give you guys a little bit of detail in that, but you really wanna connect with a loan officer. But here's how the qualification goes. First and foremost, the property has to be in an eligible county, right? So I talked about like Dallas, Kaufman, Ellis, Rockwall. It has to be in an eligible county. That's the first thing. Secondly, there's an income limit. So now it's okay. So what is the income limit? Well, the income limit is dependent on the census tract of the property location. What that means is,
hey, Joe, one thing. Can you everyone mute their phone? This is like a little noise in the background, please. Sorry about that, Joe. Go ahead. Thank you.
So the income, so first is county, right? The second qualification is the income limit. And okay, well, which income limit is it 80%? Well, it depends on the location of the property. If the property is in a middle or upper census tract, they can still qualify. If the property is in middle or upper census tract, the income limit there would be 80% of the median income. So 80% of the median income if the property is in a middle or upper census tract, okay?
I think your mic, Joe, I think your mic is rubbing your shirt, was making that noise.
Oh, okay, yeah. Sorry about that. Is that better?
Yeah, that's better. Okay, thank you.
Excellent, okay. So I'll repeat that. County, and then if the property is in a middle or upper census tract, the income limit is 80% of the AMI, okay? Now, what if the property is in a low or moderate census tract, right? Which, I mean, there are many properties out there in both tracts. So if the property is in a low or moderate census tract, that income limit goes all the way up to 150% of the area median income. So now, if you have a buyer that's purchasing, they're eligible for county, and they're buying a property in a low to moderate income census tract location, now their income limit is all the way to 150%, which is, I believe, is 129,000 a year. So someone earning 120,000 a year, buying in a low to moderate census tract, could now qualify or be eligible for the grant. So again, it just depends on the property location and where that is. Great question. So one clear point: the down payment grant is not available in Tarrant County. So if you sort of look at the Metroplex, we have the Dallas MSA to the right, we have Tarrant County, Arlington to the left. The down payment grant is not available in the Tarrant County area, but it is available on the Dallas side. Okay, so that's the down payment grant. The closing cost grant, which is America's Home Grant, it's available in the entire Metroplex for sure. So again, just wanted to give you those. If you have any questions, reach out to me. I'll be more than glad to connect you with one of our lending officers that's a specialist. We have a couple of them that I can introduce you to. Then let me touch on some of the other points of the initiative. There, if you can, I don't know if you guys can see the page. I can only see like part of it, Monty. But the other pillar that I talked about were the products. So we have two conventional products that are part of the initiative. One of them is called Affordable Loan Solution. The other one is called Home Possible. Both of those are conventional, and the key is that they are 3% down payment. 3% down payment is the required. And I'll give you my email address here in just a minute. So they both require 3%. The minimum FICO score is 640. The DTI is 50%. So they're structured to help to support a first-time home buyer. They're structured to sort of be similar to FHA. They're not as flexible. I'll say that it's not as flexible as FHA, but yet, I mean, think about a conventional product with 3% down. One of them does not require mortgage insurance. So you can imagine the savings in that. And so those are the two products. And then the resources, right? I said three things. I said grants, products, and resources. Resources, we have a tremendous amount of online education. There is the First Time Edu online series that someone can register for and watch videos online that walk them through the process in the very short, like 5-minute videos. There's also homebuyer workshops. I mean, we're doing, Carol, you know, we're planning a homebuyer workshop to host with Women's Council. We're very excited about that. We're hosting continuously at least a monthly homebuyer workshop to educate consumers on this. And then really the highlight of the resources is the real estate center. And I know that it's in this document here towards the bottom. The real estate center is phenomenal. And I'll close with this, Monty. I want to make sure that I don't overextend my time. The real estate center is an online portal, kind of like Zillow, kind of like, you know, realtor.com, where anyone in the country can go in and search for properties for sale. You can search by zip code. You can search by the name of the city, whatever the criteria that you may choose. So I would invite you to go visit the Bank of America Real Estate Center. And I'll tell you that this is why it's rich. If you're looking for a client or a client is looking to buy, they can go in there and look for properties that are for sale. That website will have about 95% of all properties that are in the MLS. We feed from a vendor, and so we have about the majority of properties that are in MLS are in this real estate center. The cool thing is this, that you can set up a search criteria. So like, let's say I only want to find properties that are 300,000 or less. But here's the cool thing. You can actually search for properties that are eligible for the grants, what I just mentioned. So literally you go there, you're going to see properties. When you see a little ticket, that one ticket means that that property is eligible for one of the grants. If you see 2 tickets on that property, that means that property is eligible for both the closing cost and the down payment grant. So think about how helpful that is for you or for a client. And you say, I've got someone that could really benefit from these grant funds. You can go into that real estate center, find the properties that are eligible, and then, you know, connect the client to the loan officer to run the numbers to make sure that they qualify within the income limits. And so that real estate center, again, very, very powerful. And what I like about that is that, yes, the fact sheet that I sent you, Monty, that can be shared with all the members. The real estate center, you can actually save, like you can set up your own profile, you know, like you do, you set up your user ID and your password. Once you do that, you can actually save your searches. Like I have a save search for zip code 75050. That's where I live. So I have a search for 75050. Then I have a notification. So anytime a property comes up in the market in that zip code, guess what? Boom, I get a notification to tell me, hey, Joe, new property just came on the market for the zip code. Or it'll say, hey, Joe, this property just changed in price. It lowered. Or hey, Joe, there's a new open house coming up. So for me, as I'm thinking as a consumer, how valuable that is, as competitive as the market is today, for me to have that instantly to know that something just came up, I'm going to pick up the phone and I'm going to call, you know, either the seller, I'm going to call, you know, whoever I'm working with to say, hey, I want to go look at that property. So just great features that I would invite you to check out. So go to Bank of America Real Estate Center. It's the link's right there, or you can just go to any search engine and just search for the Bank of America Real Estate Center and you'll find that. My contact info, if I can, let me see, how can we do that, Monty? My email address is joe.velasquez, V as in Victor, ELAZ as in zebra.
Hey, you can put inside the chat.
Oh, okay. I'll do that.
Put your email inside the chat.
Okay, yeah. I'll do that after I go off camera because I've got my phone set up on a stand here.
No problem.
And Monty, thank you so much. We're excited to continue our relationship with you. NAREB Dallas always have been longtime supporters. And again, can't wait till we see each other in person.
Okay.
Monty, thank you, my friend.
Actually, we're working on COVID's Dead happy hour.
There you go.
So we're working on that. Hopefully, we have something set up. We're working on a happy hour in June. So hopefully you can attend. So I think me and Carol are going to have a flyer coming out hopefully by next week sometime. So you get
Monty,
go ahead.
I just want to say hello to Mr. Joe Velasquez.
Hey.
It's been years since I've seen that face. Great to see you, Joe. This
Thank you
is Bill
so
Petrie.
much.
Yeah.
Mr. Petrie. Bill, oh my gosh, what a pleasure.
Yeah.
This
So I just
made
want to
my
say
morning.
hi. Yeah.
It's good to see you.
Likewise.
Looking good.
Thank you. Thank you.
Okay. All
Thanks,
right,
Monty.
okay, no problem. All right then, guys. Thanks again to Joe Velasquez for Bank of America giving this information, so we can go out there and help our clients with home ownership, letting them know there is funding available, and Bank of America is one of our sponsors for this year. So please use them. And he's partnered with Carol, our Women's Council President, Carol Home, as far as our event as well. So guys, check out Bank of America, and let's continue this partnership we got going for moving forward as we have always have. Next up, I have he's coming in now. I have Dr. Eric Anthony Johnson. He's with the city of Dallas. So let me give him a minute, opportunity to join the meeting. He's going to give you a lot of things the city of Dallas is trying to do to actually improve home ownership. So let me see if he can get in. Dr. Johnson. Hello. He just joined the meeting. Dr. Johnson. Is he muted, Courtney?
I just clicked the button to ask him to unmute, but he is muted.
Okay.
Now he's unmuted.
Good morning, Dr. Johnson. I know he's a busy guy with the city of Dallas. Are you able to talk now, sir?
Yes. Can you guys hear me? Sorry about that delay.
Hey, no problem. Thanks for joining us.
The combination of this technology. I live in Southern Dallas where we have limited broadband.
No problem. Yeah, Dr. Johnson is a part of the project the city of Dallas has as far as helping trying to improve home ownership, as well as positioning housing for individuals in the city of Dallas. Have your way, Dr. Johnson.
All right, so thank you. I just want to talk about a couple things going on in Dallas that is really, trying to change some of the narrative and the direction in Dallas. So I don't know if you guys heard, but we just had a big briefing at the city council Wednesday on this new economic development plan and the creation of a new economic development entity. Those two combined pieces, the policy is going squarely at how do we sort of really have comprehensive economic development in Dallas, with a focus on Southern Dallas in particular, which is really below I-30. We're talking heavily about that. But we also will be creating a new economic development entity that will allow us to have greater partnerships in terms of doing developments we've never really been able to do. Because in Dallas, the concept of pure public purpose means we can't just arbitrarily go and acquire land and work with home builders or whatever without having pure public purpose. So those two pieces are going to be important. You're going to also hear, starting Monday, there's a presentation at the Housing Committee where we're going to be bringing forward a new set of options for developers related to helping the market create more affordable housing. This will be beyond the thinking of HUD. It's going to be more like how do we further chop away at regulatory costs and adding things like additional bonuses for developers that's doing both single family and multifamily construction. So I want to say that the next 12 months are going to be really important in Dallas because there's a lot of things moving forward at the same time. What we really need in particular, I'm going to call it sort of below I-30, we need home ownership. We need projects that are going to start to bring some home ownership. So if you guys are in discussions with any landowners that are assembling parcels or they have sites under control, you know, what I would like to see is, you know, example, building, I don't know, I'm just gonna use what 100, you're building 100 units, single family homes. What we would like to do is work with home builders, developers, brokers to say, okay, how can we buy into 10% of those to be affordable up to 120% of area median income? You know, what do we need to do on our side of the equation? Is it the infrastructure, you know, to really make this happen? Is it creating speed through the development process, which I know is a challenge here in Dallas that we are also working on? So we're going to be looking for those types of projects, in particular, below I-30 that's focusing on home ownership. So I've been in Dallas roughly about a year and 2 months or so. So I'm not coming with any previous sort of static thinking in terms of moving the needle forward. So you guys know I have oversight of all things economic development, housing, historic preservation, planning, sustainable development, construction, which is also permitting, real estate, all of that stuff is basically under my purview. So that is really what we're after. We're going to try and, through the American Recovery Act dollars, we're going to try and allocate more money towards housing in the sense of, I'm using it like in a market perspective. You know, if you're building homes, that's, I'm making it up, $300,000, $400,000. Okay, fine. We're not against that, but how do we use our dollars to help you do that? To carve out, you know, a percentage of that to be affordable for, you know, working families in Dallas. So what's important about that is we're trying to grow the tax base south, which is only 15% of the city's tax base, 85% in the north. And we're also calling for, in this new policy, raising that tax base by 50% over the next 2 years, which means we need to get moving on projects. So look for, we call them sort of NOFAs that will come out. You would look for, you'll see things like the use of a public facilities corporation to really try and do some of that work. I just saw a chat come through. So yeah, that's really where we're headed. Yeah, so you should probably reach out to me to talk about that UNT Dallas, which to me is so underutilized. I've been struggling to understand why we haven't focused our efforts in that UT Dallas area. So I'll just kind of end with that, and you guys could ask me any questions.
Anyone have questions for Dr. Johnson?
I know you guys have some questions, man. I can see it on your face.
Well, one thing is when do you guys meet up as far as the meeting that we can actually join, number one, or number two, how to get involved with some of the where our builder hat as well. So 2-part question.
Say that one more time.
When do you guys meet to join the meeting so they'll know, so we'll know, as well as how to be a part of some of this development and the projects that the city of Dallas is having?
Yep, but first of all, I would say tune into the monthly housing committee meetings. So for example, you're going to see this Monday where we bring to the table offering a new set of tools and options, things we haven't done in Dallas before. So what I would say is sign up to at least join in and listen in on the housing committee meetings, because that's where the bulk of the discussions around housing is actually taking place. Right? That's what I would do. But I also say this to you guys. You know, if you're working with a potential landowner that's saying, hey, you know, I want to sell my property, you know, and you guys are looking to find a buyer, don't hesitate to reach out to me, because we can do things like, let's say you have a potential buyer in mind, and they want to get an option on the land, but they're looking for some sort of commitment from the city before they take it down. Those kinds of conversations, I would say pick up the phone and call, so we can actually have those types of conversations to move projects like that forward.
What's the best way to contact as far as involving with the city?
I would say you can reach out directly to me if you have any questions or clarifications on how to get involved or anything like that.
Question. Monty,
Go ahead, Bill.
thank you. That was Dr. Johnson, I believe.
Correct.
How far along are you in the review process of regulatory cost? I understand that that's a big issue nationwide on how much regulatory things add to the cost of affordable housing.
Yep.
And I thought I heard you mention that you wanted to review those things. And I'm seeing that as a nationwide push on reviewing those to see if we can eliminate some of those, as well as what you mentioned is speed up the process by reducing it without sacrificing safety issues.
Yep, you're absolutely right on point. So this is going to actually start Monday. We're moving towards identifying those regulatory costs, chopping away at those regulatory costs. So look at it this way: removal of regulatory, then what's left in terms of gap to be what we are really dealing with, right? So we're looking at things like parking across the board and its impact on development projects, right? What we're also trying to introduce is the further you go in terms of affordability, the more you're going to get from us in terms of regulatory relief and incentives. So what you're going to hear on Monday is a well-prepared presentation that has studied every single development model. And we're going to be talking about the recommendations we're bringing forward to make those changes. If you're doing let me say a multifamily development, and it costs, I don't know, 30,000 or so per stall for parking. What if you got a 40% reduction on that? If you're open to adding some affordability. What if you had smaller unit sizes? Everything that chops away at the cost, right? Then we ultimately say, okay, we went through all of that. Now, what's really remaining in your project in terms of gap? Right? So how do we fill that with either TIF or some other source that we have? But you're right on target. We've been working on this probably for the last, 6 months or so. I think we're ready now to bring something forward. So I would encourage everyone to listen in on Monday in terms of what's going to be presented, in terms of how we start to move that forward.
What time, Dr. Johnson? And go to the city of Dallas website.
Yeah, let me tell you guys right now what time.
Mind sharing in the chat?
Yeah, let me get the time. I just remember today was Friday, so it's crazy for me. Let's see, 24th, it's 9 a.m. I'll put it into the chat.
Okay, and just tell them the website as well. Any more questions for Dr. Johnson before we move on to Mr. Bill Petrie?
Yeah, one more thing, Monty. For Dr. Johnson, I heard you looking at doing different types of partnerships, and I'm working with another group where one of their ideas is to work with nonprofits that can utilize the FHA 203K to help put some of the properties back on the rolls by using the 203K rehab program. Are you looking to identify nonprofits that you can do some things with, or what is your plan along those lines?
Identify nonprofits to do some of that. If it hadn't done here, it's going to be a surprise to everybody. And the focus has been on like sort of super developments. We hadn't really focused much on the nonprofit and building their capacity to do more. So really trying to move in that direction.
I missed some of your final comments there.
Oh, my
You might
comment
have
was
with your mic.
that what we traditionally have done is focus on these like have done much sort of at the
Okay.
nonprofit and sort of the community scale developers. Trying to change that more because game is let me use the word game. Game being that we need more, we need nonprofits, we need, you know, all levels doing work in Dallas. So you're going to start to see that. We're gonna also
You're muted. Something happened, Dr. Johnson. We can't hear you.
oh, no, muted something. Can you guys hear me?
Yeah, your last part went away. You said,
You guys hear me?
what was the last part you said? The nonprofit.
Yeah. Okay. What I'm saying is we need to do what we're looking to do more to have nonprofits do more work around how do we build more capacity there for organizations to do more housing. So that really was my comment. So to the question about will we be supporting nonprofits? Yes. Only requirement I have is, you know, let us know what you're trying to focus on, have the pieces basically in place so we can help you, you know, get projects done.
Thank you.
All right. Okay. Thank you, Dr. Johnson, for taking the time out your day and just share your information for people to get in contact with you for my meeting.
Before I go, on the 26th, we're adopting this new economic. Are we really ramp up our
We can't hear you now, Dr. Johnson. Something went away.
That's why I'm in the southern sector with no internet. You know, really making me mad. I don't understand why that's. What I'm saying is on the 26th at the council meeting, we're going to be working to adopt this policy, which is talking heavily about housing and how we actually do more in the housing front. And I will tell you guys, the next 2 years in Dallas, you know, it's going to be a great opportunity. We don't get too many opportunities to kind of reset and start to do some of the things we should have been doing. So I would ask everybody to really kind of tune in and pay attention to what's going on.
Okay. All right. Appreciate it, Dr. Johnson. Next up, he's already been asking a couple of questions. The man himself, our regional 12 president, he's going to come aboard, Mr. William Bill Petrie, and discuss disputing these property taxes, which a lot of us that own homes are kind of are grinding our teeth at right now. Courtney's about to share.
Thanks, Monty.
Okay.
Okay. Here we go. Thanks, Monty, for inviting me. Anybody who knows me from the Houston area will know that one of the things I'm passionate about is making sure that people have the homestead exemptions in place. In the Houston area, I've discovered that 20% on average of the new subdivisions, homeowners have not filed their homestead exemption. And that's costing them millions of dollars. The counties are receiving millions of dollars more in property taxes than they should. So one of my key philosophies, as it shows there at the bottom, is an educated consumer is our best customer. And in this case, with myself being Region 12 Vice President, our real estate professionals is my consumer. And so my best real estate professionals are the ones who continue to educate. And it's never too late to learn. So this presentation around homestead exemption is that last comment that I make is you don't know what you don't know, but what you don't know can cost you. Sometimes it's money, sometimes it's time, but in this case, it's both. So if you want to go to the next slide and we can start talking about what homestead exemptions are and so forth. Okay. Next slide. Okay. Hold on. I can pull it up on my side. I can minimize on yours. Okay, there we go. So because we don't have a state property taxes, all property taxes are based on locally. Now, I believe most of the people here are real estate professionals in one form or another. So I don't really have to go through that part of it. But because you already know what property taxes do, the key thing that we want to talk about is how we can exempt part of our property taxes, part of our property value from taxation, and the timeline on that. Next slide, please. Okay, let's see, that's not gonna work. Next slide. Okay, so one of the things that we see is that the appraisal district has been obligated to check for all the sales from the prior year. Anytime a property changes hands, they have to eliminate any existing exemptions from that property, because exemptions only happen when you apply for them. Okay, so as of January 1, they reestablish what your value is as of that point in time, as well as get rid of any homestead exemptions or any other exemption that may have existed for the prior owner. Now, one of the things I'm finding now that our real estate professionals need to be aware of is if your client transfers, adds a person's name to the deed, that can also trigger the removal of their homestead exemption. So they need to pay attention to those notices that come in the mail. They should come out in January and February, explaining whether or not they have an exemption in place, all right? And if it doesn't show it and they think they filed it, they need to do it, because you only have to, supposed to have to file it one time, and it stays as long as you own the property. Okay. So as I mentioned already, applications are required. The general deadline is May 1st. Okay, so sometimes you'll see it written as May 1st, and other times it says before April 30th, same date. Okay, the chief appraiser is the one who decides whether or not someone qualifies for an exemption, and that is where we go from there. Now, the state of Texas has mandated that all school districts give any homeowner who occupies their property at least a $25,000 reduction in their property value, right? As you see here, Dallas County provides a 20% optional homestead exemption to all of their homeowners. And being real estate professionals, you know that that means if it's a $100,000 house, you've reduced the value, taxable value down to 80,000. So that's what we have here. Now, if we'll move forward to the slide where it talks about an example, I'll quickly do that, and then we can also get into some questions if you have any questions about it. So if you move to the example on property tax savings, I'm looking at Dallas Independent School District only offers a 10% of the appraised value, plus the $25,000 in reduction. So again, that 10% is what they consider an optional exemption. And the key on optional exemptions is the minimum value of an optional exemption is $5,000 reduction. So no matter what the actual value is, the optional exemption will not reduce it by less than $5,000. So in this example, on a $100,000 property located in Dallas School District, Dallas County, and the city of Dallas, a person with the homestead exemption will save $453 in the year. On the county side, they have a 20%, right? And on the Dallas County side, it doesn't look like much. They're only saving $48, right? And then the same thing with the city, same 20%, and they're saving $155 based on the tax rate differential. So their tax bill in 2020 would be $2,300. With the homestead exemption in place, it's only $1,656. But you see, that's still a $50 a month savings. So when we look at that from a real estate qualifying standpoint, at today's interest rates, and that gets them another $10,000 in purchasing power if that homestead exemption is already in place with the person that they're buying it from. Later on in the presentation, we'll talk about what some of those things, how the timing on those would help or hurt that situation, as well as if the seller is an over 65 or not. So you see here in the over 65, Dallas County offers an additional $69,000 in exempted value. The city offers an additional $100,000 in exempted value. But the school districts for over 65 will freeze and cap your tax bill. So the key becomes exemptions mean money, saving money through properly filing all of the required, all of the entitled exemptions. And homestead is the easiest one to qualify for, right? So this is a recap of that, of the tax code. Now this tax code that you're looking at is state tax code that every jurisdiction has to follow, all right? But when it comes to optional exemptions, that's where each taxing jurisdiction has the opportunity to adjust as they see it fit and as their budget would allow. Okay. The other nice benefit of the homestead exemption is the cap, especially in places like Dallas where the appreciation is going up relatively quickly. Having your homestead exemption in place will limit the year-over-year difference in taxable value to a maximum of 10%. Okay. So that's an important change. Well, it's not a change, it's an important thing to keep in mind. Now, on this slide, you're also seeing, oh, I'm sorry, you're not on the same slides as I'm on now. The age 65 or older exemption requires school districts to offer an additional $10,000 for someone over 65. So automatically you get the $25,000 because you're a homeowner, you file your over 65, then you receive an additional $10,000. And then additionally, if they had an optional amount, you would tack that in as well, okay? Okay, let's see. I can stop right here and take a few questions. I have another slide coming up that sort of outlines all the different exemptions that are available and who's affected by them. But Monty, if you want me to take some questions now, I can, or I can continue.
I have one, Bill. They want to know more about the school tax homeowner part. The school tax homeowner part. One Perrette wants to know about that.
Okay.
That's the school tax homeowner part.
All right. So ask me a specific question and I'll see if I can wrap that around that information.
Perrette, go ahead.
Actually, you may be about to embark upon that. I just know that you said it at the very beginning and I wanted to get more information about that specific one, but it's okay. I'll just wait and see what else you have and maybe you'll answer me.
No, ask the, ask the question. That's easy. That's easier for me.
Yeah, but I'm not sure what question I have, with the exception of that in addition to just a regular homestead.
Okay. Well, let me see if I can go back a slide.
I don't want to take us back.
No. I want to go back a slide. I just came back over to what you were presenting. It was easier for me to look at my own slide, so I wasn't necessarily in front of the slide that you were seeing on the screen.
Oh, okay.
So that's why I need to.
How many do you want me to go back?
So if we.
How many do you want me to go back?
Just go back one at a time until I see the one that. No, come forward from there.
Oh, hold on. Let me
It's
do this.
okay. It's okay. I can wait. I can wait. I don't want to derail the meeting.
Okay.
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 But
So-
go ahead. Go ahead. Proceed, Bill.
Okay. So let's see. I'm back with you guys. So we went through that example. We passed that
So
one.
go past this one.
All right, so that's the next one. All right, so this one here is not specific to Dallas, but it's specific to show you how the breakdown of the taxing goes. Okay, that's the one that I was looking for. So if we can look at that one. As you can see over here, am I controlling it? Did you give me control?
No.
There we go. Okay, so here we go. So the different type of exemptions, your general homestead, your over 65, your disabled veterans, 100% disabled veterans, and so forth. And the taxing identity, all of these have mandatory, and this one has a local option on your general, and that will vary from place to place. But the key is on school taxes. When you become, while you're a homeowner, each school district can decide if they want to have an optional, a local option. And I do have, hold on, let me pull that one over here to the side. I do have a worksheet that I'll share with you on that. And it appears in your area, the only one that has, there's 3 that have optional homestead over and above the 25. That's Dallas ISD, which offers an additional 10%. That's Highland Park ISD, which offers 20% additional, and Richardson ISD, 10%. So those school districts, in addition to the standard state mandated $25,000 reduction, they offer those additional percentages of the appraised value before hitting the property taxes. Okay. Yes. And so when you turn 65, then they look at what is your school tax bill at that time period, and they will freeze that tax bill no matter what the value, how the value raises from that point forward, subject to, if you make improvements to it, then it can be adjusted for those improvements. But if you just do maintenance, then that tax bill is supposed to be frozen for as long as you continue to own and live in that property. So that's about the extent of special things as far as school districts are concerned. So obviously the longer you own it and have the homestead in place, the lower that value would be at the point that you turn 65. Now, the other nice thing about that is for those longtime residents who had their properties and have seen it go up in a greater amount, and it's frozen at a low dollar figure. When they decide, oh, they're 75 now, and they decide, you know what, I want a different house. Well, they can move that school tax cap to their new property. There's a process that you go through to do that, so that transfers. So I just had a couple that did that here in the Houston area, where their existing home was at that point already exempt from school taxes. It was frozen when it was only like a $45,000 value, and now it's a $150,000 value. But they were able to buy something for $200,000, but their school tax bill was frozen. So they didn't have to pay based off of that. They had their exemptions in place that allowed that to happen. So those are the types of, yes.
Hey, Perret has a question. Go ahead, Perret.
Okay.
Well, okay, now you prompted me to ask the question that I really wanted to ask in the beginning. Part of your education,
go for it,
everyone, is making certain that we know when things happen. So if I'm in my home and I've put the homestead exemption, does it automatically put the school tax exemption on there, or do I need to do something different? And so a lot of people don't know that part. And I guess as a realtor, I don't even know that part. So that's my question. How do you know you have
Okay.
all of them? You know you have the homestead exemption, but what about the others?
Okay. So you apply your exemptions with the appraisal district. The appraisal
Right.
district establishes value, and based on those exemptions being in place, they send notices to the taxing entities on how much of the property tax they should assess. Okay. So when you file with the appraisal district, any entity that is taxing your property has been notified of your exemptions. And then those
No, I
things are
understand
in
that
place.
part. I'm saying,
Okay.
I'm sorry. I don't mean to cut you off. What I
No,
mean
go ahead.
is I do that first application. Does it do it for
Mhm.
everything else, or do I need to do separate applications for each?
No, that's what I'm saying. The appraisal district controls the taxing entity's knowledge of your exemptions. So you file it with the appraisal district, and they notify all taxing entities that this person owns and lives in this property. And so they are now entitled to this reduction based on them having filed that. So one filing with the appraisal district notifies all taxing entities affecting your property of that exemption being in place.
Bill, Billy Scott. All of those exemptions are on one application when you file. If you're 65, homestead, others. I think that's what she
Yes,
read.
Billy. Well, it's the same. All right. So it's the same application, but at different points in time, you qualify for different things. So if you were already a homeowner, and let's say you bought it at age 50 and now you're turning 65 this year. Now that you qualify for your over 65, you must apply for it to go into effect. So as professionals, the key for us is if we have someone in our database that we think is getting close to that age, making sure that they file it, okay? Or you at least have the conversation around, hey, have you made that 65 year yet? Okay, so gotta be careful with asking that to women, of course, because they might get offended sometimes on that one. But because you know their relationship with them, it's a safe question to ask. Okay, but yes, you have to, as you qualify for different things. So if you're 50 and then you become disabled, you can then qualify for a disability exemption, which would save some additional taxes for you. So as you qualify for different things, that happens. Same thing with your veterans. Veterans have an opportunity to adjust their exemptions based on how the VA rates their service disability. In one of the later slides, you'll see that veterans have different levels of exemption based on being 0 to 30%, 30 to 50, 50 to 75, or 100% disabled. They qualify for different dollar percentages of exemption. But it's the same form, but at different points in time, you might qualify for different exemptions. And at that point, that's why you have to then reapply, and they'll add your new exemption to your existing exemption of the homestead. Does that answer your question?
Yes. And the other question, I guess, to that same question is, okay, once you've done it, when you go to the actual Dallas CAD or the whatever your county tax appraiser, you can see that there's a homestead. So with that word that you have the homestead attached, you automatically know that they've done everything they need to do based on my status as of that moment to apply all of the homesteads, whatever those exemptions are, correct?
Correct.
Okay, so you don't see them differently, as I'm saying. If you went to the website, you wouldn't see separate things, separate line items to say your homestead exemption for 65 and above, your homestead exemption for disabled, you're home, you don't see that like that.
Well, actually, depending on the database that your appraisal district utilizes, I think there's an option for you to click on it, and it will show you each of your taxing entities, and then it should show you how much exemption you're getting for each of those taxing entities for the year that you're reviewing. Okay.
Bill, also, I know a lot of we can fill it out online, and there are some people can draw it out and have a notary to notarize it. We have so many people that never do a homestead, and we have people out here want to get half of your money, and it really no choice to do it, but they are out here taking people money.
Yes, so that was the main reason that I became so passionate about exemptions. Is the first thing that happens when somebody buys the house is there's this company that sends them a homestead recording affidavit, and they're going to charge you $45 for doing it. Okay, it does nothing of value other than reduce your pocket by the $40 or $45. There is no cost to file your exemption. So that's why it's important to me that as real estate professionals, we follow up and do it. You can't file it until the first January after you have acquired the property and are living in it. But Billy's absolutely, Mr. Scott's absolutely correct. People are charging you for doing those things, and you don't need to pay that. And that's where I think us as a real estate professional association need to educate the consumer about that, as well as filing their over 65 and any other exemptions that they're entitled to.
And to end with you, Bill, what I do is I use it as a way of staying in front of my client. And so this is a pillar of information that most of us miss out on our clients, where we need to reach out to them, especially at the beginning of the year, about making sure they filed a homestead if we put them in the year prior. Also, when that tax bill comes out in the month of April, and let them know to pay close attention, because the valuation of the taxes should not increase no more than 10% every year. And they only have 2 years tax.
If they had,
go ahead.
Say that again.
They have to valuate.
Would you start?
The property can only appreciate 10%. They can only go up 10% a year up until it reaches market value. Because right now, the way the value is going is increasing by 30. We're up under presidential time where the value is going up almost 30, 40, 50% based off what side of town you live right now. So you want to make sure that homestead is in place.
So two things to keep in mind about so here's another opportunity for real estate professionals to create new relationships, is identifying those households that are owner occupied, that do not have their homestead in place. They can go back 2 years and file late filings and get refunds. Wow. So a person could get a refund from having not filed their homestead exemption back in 2018, and they can get the 2019, 2020 adjusted. All right. So it's going to adjust their tax bill. It's going to adjust their tax bill, and it should also adjust their valuation, which would then put that 10% cap in place to further save them taxes. So for your regular homeowner, it's a 2 years. Now, if you're a veteran, they can go back 5 years and file for a late filing on their exemptions. So those are valuable things that you could utilize, as Monty just said, to stay in front of your consumer, to show your ongoing value to the consumer by monitoring that with them and for them. You can go to the next slide. Oh, go ahead.
We
Someone else
probably
had
got
a
another
question or
5 minutes.
comment?
You have another 5 minutes, Bill.
Oh, okay. Then let's go further because there's some other more important stuff that I need for you to see. Next slide.
They want to know, can they have a copy of your slide deck, Bill?
Yeah, for $15.95, just mail. No, I'm just kidding. Monty has it, as you can see. So yes, by all means. So here's the key things if you're working with veterans and surviving spouses, the key is that they should not remarry if they want to keep those exemptions in place. Next slide. Next slide. Okay, next slide. Next slide, please. We just talked on that. Keep going. Next slide. So this is something new, and I wanted to make sure that you heard about this. So in the past, when people have inherited properties, or more importantly, when they didn't inherit them properly because the people died without a will, there was always confusion on who owned the property. So now you have a person who's living in the property and they are one of the heirs. They now are eligible to file a homestead exemption and claim 100% exemption rather than whatever percentage they previously owned. It does not change their ownership percentage, but it does allow them to receive 100% exemption because they're their owner occupant. It does require an affidavit if there's any other heirs that also occupy the property so that that person can receive the benefit of the exemption. So, I mean, that's very powerful. That's going to help start the conversation on how do we clear up some of the issues around ownership on property taxes with the title companies. Because go ahead.
Let me add to that what you're saying. This is a great benefit because the problem with so many era properties is because people have lost them to the city because they could not benefit or use this. We need to make sure this is in place for individual parents that have left their kids' houses to benefit because one of them is in the house and they cannot get these write-offs and they end up losing to the city.
Right. And so now this was just changed last session of the Texas Senate. So this is a new form that's now available. People are still learning how to utilize it, but it's definitely out there to be taken advantage of. Okay. Next slide. And if you go out to their website, you know, it's out there on the website. There's even a little booklet trying to explain it even further. So as you can see here on this slide, that they need a copy of the death certificate, the recent utility bill, all right, and then an affidavit of ownership that gets notarized, all right? So again, to me, this is another opportunity for us as a professional association to educate the community about this and help them take advantage of putting this in place. Because as Monty just mentioned, this reduces your tax bill. Even if you're not over 65 when you inherit the property, the fact that you're occupying it and you can now qualify for that 20% reduction is going to make it a lot easier for you to maintain the property taxes. And if you're over 65 and in Dallas, you pick up the extra 100,000 or Dallas County, the 69,000 for being over 65. Again, it's reducing that dollar tax amount. Okay. So yes, Monty has my contact information. Go to the next slide. Monty has my contact information. So any of these slides that you have questions about, feel free to reach out to me and ask me questions about it. To me, this is one of the value added things that we can do with our community. Yes.
I'm going to send an email only to the members.
Hey, I want to say this before you go.
Hey, this is incentive to join NAREB because a lot of it is we're trying to educate membership matters. I'm going to email this. So we'd like you to join NAREB Dallas. You got opportunity because we're giving the information out because we want you to connect for all the information and resources that we provide. So all we ask is you to join our membership, and I'm going to send the email out to only the members. So if you are a member of NAREB Dallas, I will send you this link or the presentation for Joe as well as Bill Petrie. So that's the incentive, guys. So I'm trying to get everybody connected because it's called reciprocity, what we're trying to do to share our information and knowledge so we all can grow together. So any last and final words, Mr. Petrie?
Yes, please watch your emails for notice of the Region 12 General Annual Business Meeting for June 9th. It'll be from 10 to 12. It's just a short business meeting, and somewhere in there we'll have the election of the RVP and possibly the Secretary and Treasurer. So we would encourage you to listen for that. I'm going to have 1 or 2 short pieces of educational information in addition, making that part of the journal information. And we might have a new regional constitution and bylaws for you to review, but not vote on, because that would be your first time of seeing it. So that's what I have is June 9th from 10 to 12. I'll make it short and brief and keep moving forward. There are still a few spots left for the National Convention in Cleveland. For those of you who want to attend a live event, they're going to have a great big family reunion type event to celebrate virtual death and and live meetings again.
All right.
So I look forward to that. Thank you.
Okay, appreciate it, Mr. Petrie. Next up,
Let me say that word while we on that. Also about the Texas, we also have a few slots left for board members. So if anybody wants to join the board members, they can contact me. And if lucky enough, you have somebody right here that can get you on there right quick. So we do appreciate it. And if you have any advertising that you want to do in the book, you can do it now. But today is going to be the deadline, so you need to get the information in. Thank you, Monty. I get good.
okay, go ahead and share your information, Mr. Scott. I wasn't expecting Mrs. Redwine to be on the panel today, but Theodore Redwine, you mind go ahead and have your way, please.
All right, let me fly through. Okay, so I want to piggyback on what our guest speakers have shared today. And the first thing I want to remind everyone of is with programs such as the Bank of America program, it is imperative that when you get that pre-approval letter, you make contact with the loan officer and get confirmation as to if there's anything that has to be placed in special provisions. Does the special provision segment need to have any specific wording? The next thing is you need to get clarification from the lender as to how long it will take to get this process. So we are in a highly competitive environment, as we all know. And if it's 30 days, they may say yes to the 30 days. I mean, they may say yes to 45 initially, or correction, they may say yes to 30 days when you first get on board. But if it's going to take 45, we're in an environment where you have to worry about the seller having received offers better than the one they took, which means they may not be willing to extend that deadline. So just remain mindful of that. The next portion on that is in this competitive environment, we have many families who are desperately waiving that inspection. Let me remind you that if the seller is an investor or an LLC, don't do it, because you may not have recourse if you find out that there's been stories told on that seller's disclosure. You may have nowhere to go. I do not recommend waiving an inspection if it's a situation where it's going to be owner occupied. Investors know what they're doing. That's less of an issue. Keep that in mind. Now, On the quick comment about the taxation, another trigger on that taxation is if the address is changed on the property to a PO box, that will trigger the taxing authority making you confirm that you are still the owner or occupant, correction, the occupant, by having you provide utility bills. Food for thought. Also, on new homes, when it comes to taxation, the algorithms are going to be off when your clients are using any of the mortgage calculators that are out there that are based upon an address. And the reason they're off is the same thing we've talked about before. They're new homes, so only the lot value is reflected. So we've talked about it before, be very careful. Many of the lenders, if they are the lenders affiliated with the builder, often use just the lot because it allows them to qualify the applicant for more money. Be highly conscious of that. Make sure your clients are getting a realistic truth in lending statement. Now, we are now in an environment where we have purchasers who are wanting to put in a swimming pool. If your buyer wants to put in a swimming pool in the title segment on your contract, you need to make sure where it says, are there any special circumstances or exclusions or caveats associated? You need to put in the title segment that the property can have a pool placed in the yard. Now, that's the segment where licensee sales agents that don't know what they're doing put in use for residential. Don't do that. You're not supposed to do that. The state's warned repeatedly that you are not to put residential use on a residential contract. What you are supposed to put in there is if the client has said that they want to put in a basketball court or they want to put in a tennis pool, because throughout the home buying process, you may find out that's not possible. There may be deed restrictions that don't allow it, or the survey may come back and reflect there's an easement, a utility easement that doesn't allow it. You could have underground utilities. It could be electrical, it could be virtually anything that will not allow you to put in a pool. So make sure you're properly using that segment of your contract. Now, we're also in an environment where some of the homes have solar. Some of the units, now there's a Stark Plumbing has a program where you can pay for this amazing $35,000 AC unit over time. Well, if the person who's selling the home has that contract, which would be a mechanic's lien, that fixture lease comes into play. So you want to make sure if you're representing the seller or you're representing the buyer and they're bragging about this brand new AC unit, you want to ask for the transferable warranty. Hopefully they have one that's transferable and have that warranty transferred. Sometimes there's a fee involved. Sometimes the seller has to specifically state that it will be transferred. But this becomes a big issue when you're talking flippers who brag about a new unit. So you want to make sure that we don't have any issues that are going to linger. Now, one more item before I quickly address the issue with Dr. Johnson. On that option period, you want to make sure that before you get to the last day of the option period, if you have not received a written confirmation that the seller is agreeable to whatever the buyer is stating they need for repairs, concessions, or whatever the case may be, make sure that before 5 o'clock on the subsequent day, you include a cancellation of contract. Because if you just say, oh, they said they were going to sign it and they don't, you're out of luck as of 5 o'clock. If the seller has not agreed to those concessions in writing, you don't stand a prayer. So what I do is when I submit, I just do it at one time. When I submit my buyer's request for whatever it is they're asking for, I make sure my buyer is in agreement. But if it's a deal breaker, then I'm going to submit that with the cancellation at the same time so that the seller understands if you don't do it, we're out, and they've already got the documents. Now, That takes us to paragraph 21. Make sure you always have contact information in paragraph 21 for both the buyer and the seller. And I'm going to close out with the issue with Dr. Johnson brought up that has to do with the commercial. Now, on the commercial end, when you're talking land acquisition, that is not for the faint of heart. That is not something to play with. Make sure you're partnering with a licensee who knows exactly what he or she is doing. Because when you're talking about not only deed restrictions, but you're talking about issues associated with zoning, you're talking about grandfathering, which means they may have previously used that land for something you cannot use it for. And the land will have, when you're talking commercial, that land's going to have to be tested to determine whether or not you can do what you think you want to do on that. But with that, I'm going to close out. Thank you, Monty.
Okay, thank you, Ms. Wetwine. Okay, guys, before we just a recap, we are having our TARAB conference June the 3rd through the 5th. It's going to be virtual. If you're a member, it's $25. Courtney, do you mind sharing the screen on that? Our national conference is coming up. 74th annual convention is in Cleveland, Ohio, and that's July 24th through the 27th. Regional 12, we're having what's your meeting for Bill Petrie? Which said his meeting is June the 19th, right, Bill?
June 9th
June 9th.
from 10 to 12.
From 10 to 12. All right, and then July 9th, we're trying to set up a happy hour. A flyer that's coming up saying COVID's dead, so we can kind of reconnect some.
That I was gonna ask you, is that really the title?
COVID's dead. Nah, it's not dead, but we don't think it's something.
Well,
I'm just running with the Perret.
No, I mean the title itself is, it's been so much death.
Yeah. Oh, you're right. We'll change it. Reconnecting. How about that?
Hey.
All right. So that's that'll be like July the 8th. It'll be on a Thursday in the month of July that we're pushing. I think that's the right date. Carol Holmes, do you have anything to say?
Monty?
Go ahead, Bill.
One last thing. Everybody that you send those slides to, Monty, there were some other slides that are very important that they need to be aware of, particularly when your buyer buys a home from a person over 65 and how those taxes end up getting adjusted. So there were some other slides in that pack that hopefully you'll have some questions about, and for another meeting. All right.
Okay, thank you. Carol, please.
Yes, thank you, Monty. Thank you all for joining today. We had a great meeting, a lot of good information. There's just a couple quick announcements for Women's Council. I want to always encourage you to connect with Women's Council. Yes, we have partnered and do a combined meeting with NAREB Dallas, but we are still our own entity doing a lot of community work. And so we're going to do we're actually in the midst of, and we've been posting and emailing and blasting out a flyer. We've partnered with Chris Ziegler of the Ziegler Agency. Well, we'll talk about this one first since he's got it up, Courtney, no problem. We're partnered with Bank of America, and we're going to be doing in the month of June, with June being home ownership month, we're going to do a home ownership solutions, and it's our traditional financial literacy, but we will have them as a sponsor, and then they'll be talking about some of their home products and some of the things that Joe shared. They're going to go deeper in. So we'd love for you to send your clients that you have to this event. And it'll start being marketed starting next week for the next 3 weeks. So it's going to be June the 12th. And then the other thing that we're working on is a spring drive. We're partnered with Chris Ziegler to collect canned goods, food items, cleaning products. And we have a couple of drop-offs, one in DeSoto, one in central part of Dallas, and then at Chris's office. So Chris Ziegler with the Ziegler Agency. And so we've got through the end of the month, and the very last day to drop off is on Saturday. What is that, Chris? May the 20. There it is. Thank you.
May the 29th.
Yeah, there you go. So we just love for you guys to partner with us. We're still doing things in the community. It's so important that we do. And we'd love for you guys to connect and bring some cleaning supplies so we can clean up and make our lives fresh. And these are the places that we're actually going to donate to: the Frisco Family Services, Services of Hope, and Community Life Centers.
I was going to tell you guys as well, like Monty said, like I'm taking this opportunity also to kind of have a social gathering, like I said, when we said reconnecting. So I will have some refreshments here of the adult kind, you know, the children are here as well. I got stuff for them also. So love to have you come out so we can kind of interact and kind of start meeting again.
Awesome.
That's on the 29th.
Mm-hmm. Thank you so much.
Okay, thank you, Carol. As once again, guys, we come to an end of our meeting. Steve, you mind praying us out, please?
Yes. Dear Heavenly Father, thank you, God, for just allowing us to be present here on this meeting, Father. We know that our time and could have been directed in any other direction, Father God, but you allow us to stay present, stay connected, and get informed, Father God, so that we can do a better job serving our community and serving this organization. Father God, let us continue to thrive collectively as a whole, Father, and grab new members, Father God, because we know that the power is in numbers, Father. And so we allow everyone to center around the focus of building a democracy and housing organization, Father God, building on top of that, Father God. We just love you and we thank you, and we give you all the power and glory. In Jesus' name, we do pray as we come back again to your rest. Love you. Thank you. Amen.
Thank you, Mr. Lewis. Once again, guys, we've come to an end of our meeting. If you're interested in joining our wonderful organization, you can go to narebdallas.org. If you have a problem joining, just please feel free to reach out to me. I can walk you through it. But once again, this is why we are democracy and housing, and anything for the good of NAREB Dallas before we end our meeting.
Also, the 1, 2, 3s of joining is also on the Facebook page.
All right, thank you, Perrette. Anything else, guys? Once again, we end our meeting with a wonderful prayer, and I say have a wonderful day, and let's go out there and make an impact in the community and add value to ourselves and our people, because that's why we exist. And this is power to the people. Take care, guys.
All right.
Thank you.
Have a great day, great weekend.
Thank you. You have a good one.